There are three different sections of the NHS Pension Scheme: the 1995 section, the 2008 section and the 2015 section. The way in which your NHS pension benefit works depends very much on when you join the scheme. The standard benefits you receive from the NHS Pension Scheme depend on which section of the scheme you belong, whether that be the 1995 section, the 2008 or the 2015. For many members though, there are three main entitlements: your annual pension, a lump sum at retirement and a survivor pension. The way in which your benefits are calculated depend on which part of the scheme you're in, as well as whether you're an officer, e.g. a hospital doctor, or a practitioner such as a GP. Generally speaking, the 1995 NHS pension scheme is the most generous, as it's calculated on a final salary basis rather than a career average basis like the other two. It's also the only scheme that provides an automatic lump sum, which is 3 times the value of your annual pension, without you having to give up any of your annual benefit. To complicate matters, you may have built up benefits in more than one section of the scheme, so a number of different calculations may need to be made for different periods of time. You can find out more about how your benefits are calculated by speaking to a specialist financial advisor from Wesleyan Financial Services. On 6th of April 2016, changes were made affecting the amount that can be saved into pensions. These changes impacted both savings into defined benefit and defined contribution schemes, including occupational and personal pensions. Annual allowance, in a nutshell, is a maximum amount that you can save into your pension pots in a tax year without incurring a tax charge. Any amount over the annual allowance will be liable for a tax charge, and this could be up to 45% and is dependent on other taxable income, plus your highest income tax bands. You can also carry forward any unused allowance from the 3 previous tax years. Your lifetime allowance is the amount of your annual pension and lump sum you can take before you need to pay any charges to HMRC. It sets a limit for the amount you can pay into your pension pot over your lifetime without a tax charge. This has been frozen until April 2026, and the limit applies to everything that you save towards your pension and pension benefits, not just your NHS Pension Scheme benefits. Your state pension doesn't count towards your lifetime allowance. It's probably worth providing some background here for those who are unfamiliar with McCloud. So in April 2015, public sector pension schemes were reformed, with most members moved into a new career average arrangement. At the time, transitional protections were put in place to protect those close to retirement. In December 2018, these transitional protections unlawfully discriminated against younger members of the judicial and firefighters schemes. And in July 2019, the government accepted that the judgement applied to all the main public sector pension schemes, including the NHS. The government's remedy to remove this discrimination from all public sector pension schemes is to introduce a deferred choice underpin, or DCU, allowing members to choose which scheme they receive benefits from for the remedy period. The most recent development is that on the 1st of April this year, all members affected by McCloud will be returned to their legacy scheme, either the 1995 section or the 2008 section, for the remedy period from April 2015 to 1st of April 2022. It's fair to say it's a complex and technical area impacting people in different ways, so if you're concerned about this, it's worth obtaining advice. It is important to obtain some good financial advice and start thinking about putting a plan in action as early as possible to ensure you make the right choices and provisions for your ideal retirement. If you are thinking about retiring early or taking phased retirement, there are also a number of options to consider that we can help you with. Changes made to pensions, particularly those in 2015, could have a real impact on your benefits and how your membership is calculated. So it's a good idea to sit down with someone who knows the NHS pension scheme inside and out to ensure your expectations are being met. If you find that your current pension is falling short, there are a number of flexible options to boost its value, but you'll probably need some help to fully understand what these are. Running alongside your pension, you'll no doubt have existing savings and investment arrangements. We can review your current situation to ensure these are working as hard as you need them to. Finally, it's important to review all of your plans and arrangements regularly throughout your career, as your circumstances and priorities may change. At Wesleyan, you have a dedicated specialist financial advisor from Wesleyan Financial Services who works exclusively with your profession, who can support you throughout your life and career.